Alright, I just made this video once, but for some reason the mic aux was set to my webcam and not my microphone. So it sounded terrible. So now I get to make it again. So if we look at market structure on a daily time frame, we're bearish because we broke this intermediate term low and we failed to make a higher high here. This is a long-term high. This is an intermediate term high because it filled in this imbalance. We're trading within this daily sell side imbalance, but now we are trading away from it. But price doesn't look like it's done hanging around. It likes this spot for some reason. So if we go down to an hourly time frame, this intermediate term high formed at 2 a.m. this morning, and we broke it at 7 a.m. this morning. So going into the trading day, I'm going to be expecting higher prices, and I'm going to be looking for a long position. So pretend like you didn't see any of this. Actually, I'm going to leave this on. This was our bullish shift in market structure. Keep that orange. 5-minute chart here. So we break market structure here. So directly after this point in time, 7:05 a.m., I'm looking for a long position. Trade down. This vertical line here is 8:30 New York time. News embargo lift. So after this point, I'm looking for a long position after 8:30 in the morning. So right before 8:30 open, we form two relative equal lows. At 8:30 open, we take the stops above this swing high and trade back down. And we trade up once more and take stops above this swing high. So I'm going to mark this as a buy stop raid. Alright, and before I get any further, let me backtrack here. And we want to go long when we're in a discount range, right? We have bullish market structure. We're looking for a long position, but we don't want to go long in a discount. So where are we in our range? Well, lowest low here, and I'm going to be looking at this high. This is the highest high after this low. So I'm going to drag my fib from this low to this high, and now I'm going to be looking, are we in a discount? Equilibrium is this red line. So if we look, yeah, I mean, we're going back and forth a little bit, but if we can catch something below this red line, we'll have entered in a discount range. Ideally, we want to get in down here. We'll get into that. So, but just so you know, this is transpiring around equilibrium. I'm going to leave this up just so we can look at it. And let me go back to a 15 for one moment. I want to outline this. If we look at these consecutive down close candles and then we trade up from there, that makes this a bullish order block. So I'm going to outline this order block because, as you can see, price ended up coming down to it right here. And if I zoom out a little bit, you can see that when price came down and hit this order block, it came right past 62% retracement level. So here we go. The day has just begun. We're looking for a long position. We just raid buy stops above this high, and we trade down below these relative equal lows, past this buy side imbalance, just past 62% retracement level, and into this order block. So for anyone who knew that we had a bullish shift in underlying market structure, higher time frame, hourly chart market structure, and they saw these relative equal lows here, and they knew that 62% retracement level is right here, and this bullish order block was directly below that, and they saw price raid buy stops here, trade down below these relative equal lows, past 62% retracement into this order block, they could have gone long here if they were that good. I'm not that good. I took one trade today and it lost, and you can see that in the other video, but I'm just making this. So basically, we hit this order block and we move away from it with a great deal of energy. You can see we even made a fair value gap here, so I'm going to outline that. So here we have a fair value gap below equilibrium That's important. Below equilibrium. It's not ideal entry. This would be ideal entry. But if we're below equilibrium, it's still a valid trade. So fair value gap right here. I'm going to go down to a 3 minute. And the first thing that catches my eye is this. Swing low, swing high, lower low. So breaker pattern formed. So now I see this breaker. I'm going to be anticipating price trading back down into this breaker pattern and going higher from there. And let me put this on bottom. So here we go. We have a fair value gap and we have a breaker. And now if we go down to our lowest time frame, a 1 minute, see, we have a trade idea. We want to go along. We're below equilibrium. We have bullish market structure. So now we're going to go down to a 1 minute. Now that we have all these PD arrays lining up for us, go down to a 1 minute to find our best entry. And when I go down to a 1 minute, I see, okay, we have another bullish order block right here. Mark this out. So now we're looking to go long when the underlying market structure is bullish and we're trading in a discount and we have a fair value gap and a breaker and an order block all lined up for us to go long after, and all of this formed directly after we traded down to 62% retracement and jumped out of this bullish order block. So price trades down once here, touches this fair value gap, touches the fair value gap here, moves higher, trades down once more, this time trades into the fair value gap, one tick past the breaker and touches the order block to the tick, and then from there we take off and end up taking out yesterday's high of day right here. See, we take it right here. Now, we don't want to go long unless we're in a discount, right? And we know that we're in the discount range of the larger scale range, but where are we in this specific price leg? This move away from this 15-minute bullish order block. Well, if we drag a fib from our swing low here at the beginning of this move upwards and we put it to the top, then we can see price traded down just past equilibrium in this fair value gap to this breaker and order block and went higher. So that was a trade entry that I saw today. A possible entry that follows all the criteria. So I figured I'd just outline it. And that's all I got for you, really. Alright, I'm back. I figured I might as well just talk about the rest of the day. So after we ran up from here and took out yesterday's high, we traded back down to equilibrium of this move. We went higher again, touched yesterday's high once more, and then traded down into New York lunch. And then we made this low during New York lunch, came up, and then at the beginning of the afternoon session we started going down, took out this low here, and then we basically just traded up into the close. Now we made this high and then traded away from it, so now we have relative equal highs here. Trade past them and into the close. So this is at 3:30. Price ran up, took out these highs, ran up into this sell side imbalance right here, and that's where we've been hanging around since after close. Now, one thing that I did notice was this: I'm going to go to a 15-minute. And this high that we made at the end of New York lunch, if we project this out in time and we actually look at the structure of it, here's a swing low, a high, a lower low, we trade past it. So here's a breaker pattern right here. And if we look at our 1 hour market structure chart, there has been no change. We're still bullish in market structure. No intermediate term lows have been broken. So it looks like tomorrow we're going to be looking to make a run up into this daily sell side imbalance. But maybe that isn't the case. A lot can happen overnight. But that's where I am right now. Underlying market structure is still bullish, and we have this large breaker pattern form. Alright, I found one possible trade that I might have taken in the afternoon if I had been on the charts. So we made this low during lunch, and then we trade back up above this high. And then once the afternoon session starts, we trade down, and we don't just go through this low. We actually come down to it, and you see this green candle. We move away from it, and then we trade down. So we're on a 5-minute chart right now, and I like to see this. I've mentioned this before, I believe. I like to see a 5-minute fair value gap, and then a lower time frame fair value gap, inside of that. So there it is. Now if we go to our lower time frame, and let me just preface this once more. I don't know if I said this. We have a low here. We come back down. We come down to this low and move back upwards. So now we have relative equal lows with a sell side imbalance right above them. So what am I thinking? Okay, price is going to trade up into this sell side imbalance, and then I can sell there, and it's going to want to go below these relative equal lows. Down to a 3-minute chart, we can see our fair value gap has gotten bigger. I'm going to outline it on every single time frame, but I'm going to need to lighten these. So we have our 5-minute, we have our 3-minute. We have relative equal lows. Good enough. All right. So we could sell in this fair value gap right here. But I'm going to keep going to a lower time frame and see if there's anything that could give me a better entry. 2-minute. Not really seeing anything better. The fair value gap is still there. And go down to a 1-minute. Here we have a higher fair value gap and a lower fair value gap. So there's this swing low right here, and this is actually a bearish order block because it's a green candle. So if we outline this order block and extend it out in time, we can see that price went into this order block and then traded off from there. And actually it went up to the order block once, traded down, went into it once more, and then we passed these relative equal lows. And we made relative equal highs in the process. If we extend these out in time, this is a characteristic of the charts. When it gets to a level that it wants to go through, it usually won't go through it right away. It will get to it, turn around for a second, and then go through. Like, look at this. We get to this low, we come down to it and move away. Come down to it again, move away. Then we push through. Now we have relative equal highs here. We get to our relative equal highs, and what does it do? Touches it, moves away. So there you go. That would have been my afternoon trade right there. And if we had sold in the order block, I don't know why it keeps putting me all the way. There we go. If we sold in the order block, we'll go right at bottom, and we'll let go of our position below this low here. So I don't know, just a little below that, 20 points. And assuming we sold in this the first time it ran up, because why wouldn't you? And we hold down here, that's 20 points in 11 minutes. Holding one contract, that's $400. Holding 5 contracts, that's $2,000. Holding 5 micros, that's $200. So whatever your account size lets you do, that's good enough right there. You don't need this to make money. You can make money right here. And if you ask me, this is a lot simpler and a lot cleaner. This is a headache over here. So that's all I got for the day. Have a good night.